This is Nate G with another quick training video in the Lotto X and Weekly Money Multiplier series. This one is on taking a trade, setting a stop, and setting a profit target. Today's example, we are using the ticker COUP, COUP. This is from a couple of days ago, and we're using the on-demand feature here in TOS to take us back to when we took the trade and took the profit off on the trade, because it's a perfect example, and this is the way that we can show how the trade was taken, what the parameters of that trade were, and what the resolution to that trade was. This was a trade that worked out in our favor. They don't always work out in our favor, but if we set up all of our criteria correctly, more should work out in our favor than don't. So COUP here is in a uptrend. It's in a bullish uptrend. It is at all-time highs or just under all-time highs. If we go to a weekly chart here, we see that COUP is way up in a very strong bullish uptrend. This is the daily. Go back to the daily chart. I've marked the all-time high here, or roughly the all-time high. COUP, as we looked up on FinViz, has 15% short float, which means if it breaks the high, a lot of those shorts are going to have to be covering, which results in buying, which means the stock's going to go up even further. So we know that COUP has a squeeze here on the 130-minute chart. We are in a bullish uptrend. We do have our pattern, TPS pattern, as our pullback, consolidation near these moving averages. And finally, we have a squeeze with momentum shifting upwards. So all the criteria, trend, pattern, squeeze, under all-time highs, and a relatively high short float means this is a no-brainer trade as long as we can get a good entry. What we have here is the stock this morning is making a little bit of a pullback to the 21 EMA. This is a pretty standard spot we like to take a trade. It's a very good risk-reward level. If we can get that trade off the 21, then we can use just a close just below the 21 as our stop, and then set our profit target. And I'll show you how we kind of work out that risk-reward in this particular scenario. So if I wanted to set a potential profit target, I'm going to use the Fibonacci tool, the Fibonacci extensions tool, and I'm going to measure in our pattern from the high to the low, and that's going to give me a profit target. So we're going to remove some of these lines here so they don't get in the way. Those are the Fibonacci lines if we're trying to measure the size of different pullbacks or the extension of runs. So here is what our trade plan is going to be on COUP. We are going to take a trade at or near the 21 as best we can, which we're going to do here shortly. As you can see here on the 5-minute, it's dipping. It's kind of met this level from yesterday, potential support level. And so we're hoping for a turn there. It's off the 21 with a tight stop. So I'm going to take a trade here, probably a relatively short-term trade, 3, 4, 5 days, because I'm expecting this to have some sort of resolution, whether going to targets or failing and getting stopped out within a day or two. So I want to leave myself a little bit of time, but I'd like to try and capture that move. So I'm taking a trade here off the 21. I am going to set a stop somewhere. Let's grab the square tool. I think I will set a stop somewhere in this zone here. And I will set my profit target at the 1272 extension at 224.71. So let's say we're taking the trade at about 110. I'm setting a stop at about 208. So 210 is the entry point. 208 is the stop. That's $2 for a potential resolution of 225, which would be $15. So I'm risking $2 to make $15. If I take a full trade here, I probably am going to want to stop somewhere in this range below this 21. However, if I take a half size position, another place I can add is at this lower Bollinger Band, because a lot of times if it continues to pull back, it'll bounce off that lower Bollinger Band. And in this case, lower Bollinger Band and 34 EMA, which is another support line, are right there together, which would be another place to take an entry if you are not already in it, or add to it if you don't already have a full position. However, if you have a full position and you wait for it to get down here, you might be 30, 40, 50, 60% underwater on your trade. So it's advisable to use the 21 EMA on the 130 chart, a break of that as your stop or a close of a candle underneath it. Sometimes it will pierce it just a little bit. So now let's go forward a little bit and see the resolution. We've taken this trade here. Okay, let's put a little circle there so we can see it. We've taken the trade here. Okay, with a stop somewhere around this area down here. Let's put a line in there just so we can see it. And now I'm gonna, let's go 208. Okay, 208-ish. That's our stop out point. This is our target point. So if we go forward just a little bit in time so that we can see the resolution for this particular trade, what we have is our buy point. It did pierce through that 21 a little bit, but it did not reach our stop line of about 208. And what you see is in the next day, overnight, it gapped up a little bit the next day and ran up to our 1272. And that was our exit point there. And so we got our $12 or $13 of movement in the stock, and we took that off for about 85%. It did go through the 1272, so we could have taken half off there and waited to see if it went all the way up to the 1618. But many times it's just better to not hope and just have your entry, have your stop, have your target, say thank you very much, market, and walk away with your money. If you have any questions on this particular trade or the setup of taking a trade off the 21 and using the 1272 extension, please leave those questions in the comments, and we'll get back to you as soon as we can. Thanks.